Right, what's up everyone? So today we're going to be going over the trade that we managed just to scalp at New York Open. It was a 64 point move, which was nice, and it was a 1 to 2.58 risk to reward. More or less, obviously we had clear draws marked out below that were even further, such as the 5 minute equal lows that made London's low and Asia's low, as well as aiming to mitigate all of this LRO in the process that was built up essentially since the daily open. So getting into it, the whole preface behind this trade was that obviously in the back end of last week we had this huge sell side that ended up taking out all of these stops here, which left behind this huge hourly imbalance. Then if we go down into the 5 minute, we can see that basically through Asia and through London we ended up trending back into it and basically mitigating it, which was great. But as you can see here, if we go on to, well, I believe it is the 5 minute, yep. If we just draw a fib, we can see that basically from this sell side move here, we ended up mitigating back. Oh, sorry, hang on. We ended up mitigating back into a discount of the leg, which basically means that we mitigated over 50% of the move, and we were no longer trading in a premium if you were looking for shorts, which was great as essentially it played into our bias later into New York. So within the hourly and in discount, we had this huge 5 minute gap, which price was clearly respecting, and price had delivered into it. Once on Friday here, and then once here as well. So if we just get rid of that, so then essentially one big thing that we wanted to see here was the 5 minute and 15 minute inverse, to assume that obviously we wanted to mitigate all of this LRO here and obviously take out the current daily low. But essentially reminder that it still is December, which means that we are 10 days away from Christmas. So basically, delivery is typically expected to be a lot lower. Prices are expected to be a lot choppier. Therefore, since this is an eval trade, obviously we were inclined to take more risk. But due to the expected nature of the market, we thought, you know what, we're happy with TPing at kind of internal range liquidity and whatnot, rather than holding for bigger targets, and kind of happy to be one and done in what is expected to be kind of a choppy environment. So the whole preface behind the trade was we ended up distributing higher through Asia and London, I think over 200 points, which was great. We ended up delivering into the hourly, into the 5 minute, great. So then going into pre-market, we had, I believe this was originally an SMT here, which was, yep, so that was the SMT here, and we ended up delivering lower, great. Sorry, no. So ended up coming down, and this was the 1 minute inverse we were looking for. Yep, we ended up retesting it and bouncing off perfectly, sweeping the current London high, failing to displace above it, making a new bearish SMT, which was great confluence for the trade. And essentially what we wanted to then see was the 1 minute inversion, break even at this internal low here. This was essentially the bottom of the 5 minute and 15 minute inverse, which would have been great confluence to go lower. And essentially we had these what would have been 5 minute equal lows here, which was our final TP at internal range liquidity. Oh, sorry. But then the whole preface was that if you're going to mitigate some of this LRL, it would have been all the way down to London equal lows, as 5 minute equal lows, sorry, as well as the current daily low and Asia's low, taking out all these buy stops here. So, but the thing is, obviously, as we say again, it was December. We were happy to kind of TP at internal range liquidity, especially with this being an eval play. So the whole aim is just to accumulate more and more funding. So to be one and done, just a session opened, was quite a good thing. Basically, so as we saw, fine, we got the 1 minute inverse here. We did just about missed break even. Price was spiked all the way up just as market opened. And then obviously as market opened, we saw a huge fluctuation in volatility, just about missed our stop loss, which was at the top of the 5 minute gap, which price was delivering into and then out of. Came back down, slammed through the inversion, slammed straight through break even, through the 5 minute and 15 minute, and more or less straight into TP. So again, this was a 64 point move, 1 to 2.58 risk to reward. Essentially just going over it again. How does this tick the boxes? Right, so just going over quickly how this ticks the boxes, or the checklist we saw for the trade. So trade checklist. Right, so we saw a huge bullish trending move through Asia and London, right? This move delivered into an hourly gap rebalancing over 50% of the inefficiency and into discount shorts. Right, perfect. So then within the hourly, we saw a fill of a 5-minute PD array and respect of it. We saw a sweep of London High, invalidating an SNT, but making another within the PD array, and disrespect of a 1M inversion. Right, so we saw a huge bullish trending move through Asia and London. This move delivered into an hourly gap, rebalancing over 50% of the inefficiency as we saw the sell side move from Friday. And back into discount, which was looking for shorts, which was over 50% of the retracement. We filled the hourly, and also in the hourly, we delivered into a 5-minute PD array and respected it. We swept the London High inside the PD array, invalidating it and the SMT, but making another bearish SMT on the sweep within the PD array. We saw complete disrespect of a 1 minute, of a 1 minute gap, turning it into an inversion with clear targets below as LRL, but TP'd earlier at internal range liquidity due to seasonality. Right, so this is essentially the whole preface behind the trade. It was pretty textbook for us, and yeah, overall quite happy with it. Was able to be one and done more or less under 10 minutes into session open. Right, so that's the end of the episode. Hope you enjoyed it. Again, this was a Eval play on Apex, so more or less just trying to accumulate funding throughout the December kind of seasonality, ready for January. So yeah, if you have any questions, drop them below. Again, if you want to join our free Telegram, just comment below and we will send you the link. And yeah, see you in the next episode.
See you in the next episode. Magnus out.